Money is something that's not really talked about in general practice, and particularly how to manage it as a GP. It's not really taught to us. It'd be nice if we had a bit of a guide to help us understand what to do and how to manage things, particularly when it comes to things like tax, pensions, and more. Well, in this episode, I'm joined by Dr. Tommy Perkins and Medics Money as we talk about all these aspects, whether it is that you're aiming to start in general practice, whether you're training as a GP, whether you're already established as a GP, or whether you're coming up to retirement as well. And we've got different aspects to cover for all of these sections. We've got loads of links and content provided by Medics Money to help you understand all of this, and we're going to cover it all in this episode, so stick around till the end as well. As always, make sure you subscribe, like this, give us a comment if you think it's useful, and as always, EGP Learning is here to help save you and your patients time by taking hands in your primary care and learning. Shall we begin? Hey GP learners, so I'm joined by Tommy Perkins of Medics Money as we talk about how to basically improve your finances. How are we doing today, Tommy?
We're good.
Cool. So I know you've been part of Medics Money now for a good year or two now, isn't it? And we actually had our first chat about 10 months ago, I think it was, where we talked about trying to help newly qualified GPs with their finance. But the world's in a different place now. How have things been going for you guys at Medics Money?
Yeah, things have been going pretty well. We're essentially a 100% online business, and we just people have started to really resonate with what we do, educating people about their finances. So we've grown a lot. And when you said it was 10 months ago that we last spoke, that has actually whizzed by. So yeah, things are going as well as they can be. I mean, obviously as well as Medics Money, I'm a GP partner. So that's, as you well know, that it's the busiest it's ever been at the moment. We've had to adapt to whole new ways of working, which I don't need to tell the listeners of your channel how hard that's been, but that's been a challenge. But Medics Money is the easy bit, to be honest with you, right now.
So why don't you tell us a little bit about how Medics Money got started and kind of what it does and how it can really be, to be honest, some amazing use to people.
Yeah, that's really kind. Thanks for that. So what it does is two things, really. So Medics Money is me and also my colleague, Ed, who is now, he's actually just CCT'd in August. So he's also a GP now. But yeah, Ed's a bit unusual because he's also a chartered accountant and a chartered tax advisor. And he worked at PwC, which is one of the world's biggest and best accountancy firms for 9 years, and then decided to retrain as a doctor. And what we do at Medics Money, we notice two main things, really. One, that doctors really struggle to manage their finances. And that wasn't because doctors are stupid, because they're definitely not. It's because doctors weren't given any financial education at all. I don't know about you, you probably went through med school like me without receiving any financial education whatsoever. And worse than that, if we did get any financial education, it was from sort of salespeople that were trying to sell us something. And they weren't really interested in educating us and telling us how we could help ourselves. They were interested in selling us their products. So one thing that we do is we provide free financial CPD for all doctors, from F1, even med students, right up to consultants, GPs, and into retirement. And we cover everything. So simple stuff like budgeting, savings, how to sort out your tax code, right up to the latest information about the McLeod and Sargent pensions case, which you might know as the firefighter case, where they've successfully argued that it was discrimination. So we cover everything that doctors need to know. And we deliver that in several ways. We've got our podcast, which thanks to you, we've started. We're 10 episodes in now and it's going really well. We've got a blog. We've got a free ebook, which you can download, and that's totally free. And that gives you everything that you need to know to help yourself. So that was one thing, that doctors struggle to manage their own finances. And obviously with Ed's unique skill set, we're in quite a good position to do that. And the second thing that we noticed is that doctors really struggled. You can manage your own finances to an extent, but eventually, most likely, especially as GPs, most of us will need an accountant, a financial advisor, and buying a house, a mortgage advisor. And doctors struggle to know where to get good advice because there's so many people out there calling themselves specialists in doctors. And what we notice is that non-specialist accountants were more likely to give our colleagues incorrect advice. And obviously with Ed's skill set as an accountant, in the same way that a good doctor can recognize a good doctor, Ed is an accountant and he can recognize a good accountant. So what we've done is we've got what we believe to be 38 of this country's best specialist accountants, financial advisors, and mortgage advisors. We've put them on our platform and we match you to them. So if you say, I'm a GP in Luton and I'm looking for pensions tax advice, we will match you to the most appropriate member of our network for your needs. So we kind of we use the concept of medical triage to triage your needs to those on our network. And we grew from having only 3 now to 38, the absolute best, biggest names in the industry, all been through our very strict due diligence process. I was on Twitter the other day, and one of our financial advisors said that he's done 16 or 17 financial advice qualifications, and he said the due diligence process for Medix Money was worse than any financial qualification that he's done, because at the end of the day, me and Ed are recommending these people to our friends. So we give them, a pretty robust discussion, and having Ed's knowledge allows us to get in really deep and check that they are as good as they say they are, in addition to all the other checks we do. So that's kind of what we do. The why is a long question, but I'm going to be really brief. So for Ed, the why is pretty straightforward. He was an accountant. He retrained as a doctor, and he tells this great story on our podcast, how he was working on the ward, and one of the HCAs had 2 jobs, right? So she worked as an HCA, and she also worked in McDonald's, and she took a second job at McDonald's to supplement her wages, and her pay went down, and she was just like, this is nuts. Why has my pay gone down? And he's like, okay, let me have a quick look at your pay slip. And she was on the incorrect tax code, right? She didn't know that. No one had ever taught her that. So he just done a few things, sorted it out for her, and bam. And then everyone found out he was an accountant. And so by the end of med school, he was doing he's done self-assessment for some of the biggest names at King's Medical School, because they just found out that was his unique skill. And then fast forward about 5 years, I was doing an A&E locum. And what I'd been doing is, when I left med school, I had £85,000 worth of debt. I was the first member of my family to go to university, came from very humble beginnings. So I had no financial support. I had all this debt. I had no education. And over the next sort of 10 to 12 years, I had to educate myself on how to pay down debt, how to save, invest for the future, how to protect my income. All of this stuff I had to learn. And I got quite good at it because I had 85 grand in the hole of debt. And so people started asking me, I think what happened is I got a £2 grand tax reclaim, and everyone was like, right, I need to know how to do this. And I was like, cool, I'll show you how to do it. So I showed some of my friends, and then showed some of their friends. Eventually I was helping way too many people, and I tried to sort of shut it down, but it just wouldn't die. But I didn't want to really get into it full time. And then fast forward, I met Ed. I was doing an A&E locum. I was actually doing a house renovation. So as a little investment, and I was trying to get the extra funds by doing locums. I'm sure everyone's been there. And Ed was an accountant, and he was telling me his story. And I was like, hey, somebody should really get together to like help doctors, give them the education that they need, and make a safe space where they can get advice from good quality advisors. Like, somebody should really do that. And he was like, yeah, somebody should really do it. And then we sort of slowly realized that we were going to have to do it. And it was a big call to start doing it, because I think we're like reluctant entrepreneurs is how I describe us. Like, we both love being GPs still, even though it's really, really hard at the moment. But we realized that somebody needed to do this. And we kind of realized that not many people had our niche skill set. So about 2 years ago, we just went for it. And to be honest, we've been absolutely blown away by the support that we've got from the profession. Everybody's been so supportive, shared it with their friends. And as a result now, we're quite big. We've got about 21,000 email subscribers that get their free financial CPD via email. We've helped over 2,000 people find a new accountant, financial advisor, or mortgage advisor. Our Google feedback looks fake because it's just like 50 5-star reviews. It's not all left by my mum, I promise. So yeah, that's the kind of really quick whiz through about what we do.
Cool. And I think with that, like you said, there was that journey at the start when you guys were training and things to figure out how to sort out your finances a lot better. And like you said, finance is probably one of the areas where a lot of our peers just don't spend a lot of time, and actually they probably need to spend a little bit just to make sure that they're not getting headaches down the line and stuff. And nowhere have we seen that more of an issue, I guess, with pensions in particular. And we're going to get into that. But I thought probably a better place to start would be where you were a few years back. So as somebody that's coming up to general practice, so, your F1s, F2s and GP trainees and stuff, if you had to give them a couple of tips of things that they just really have to do now to try and sort out this whole financial world that they need to think about, what would you say would be those kind of tips right now?
Yeah, so for like pre GP training, basically.
Yeah,
right?
effectively.
So, yeah. So I think there's a few founding principles that Medix Money is built on, and number one is that if you're not stupid because you're a doctor. Okay. So if you educate yourself reading the right information, and there's a lot of incorrect information out there, unfortunately, which is why we started Medics Money, to give correct information.
Mm-hmm.
But if you educate yourself, you are probably going to be the main person, that benefits from that. And you can manage most of your finances yourself. You don't need an accountant or financial advisor to do the basic things. So get yourself educated will be the first thing. And the second thing that I would say, which sounds a bit flippant to say, but actually the more I see of people's finances, the more it's relevant, is spend less than you earn.
Mm-hmm.
Okay. I just think about that just, for a bit, because if you spend less than you earn, that sounds really simple. But if you do that, you're going to be in an all right position, because then that facilitates cash flow for other things like investing and things like that. And that's when you can really start to see the benefits of compound interest and make some gains. Okay. So that's the two principles. Get educated. Definitely Medics Money is a great place to do that. And I guess the thing to say is that as doctors, you are going to need advice at some point for the reasons you've already mentioned. The pensions is too complicated to do on your own, okay? But when you're an F1, you don't need advice. There's just a few things that you need to do, which we'll talk about. But when you get advice, just think about, is that advisor qualified? Because accountant is a non-regulated term. Me can call ourselves an accountant right now. It's not like doctor. It's not a regulated term. And so there's loads of really good advisors out there, but there's also some advisors that are not so good. And so at Medics Money, we only recommend the very best that have been through our due diligence process. So just think about, when somebody recommends you advice, what do they know and why are they recommending it? So to get back to that's the sort of principles overarching everything. So if you're F1, F2, right now, what I would do, I got three things, right? So that makes it tricky because there's a lot more than that that's needed. But I think the first thing that I would do would be to get a handle on your tax. Okay. Tax is going to be the biggest expense you have in your life, the tax you pay, not your mortgage, not your holiday bills, unless you go massive holidays, maybe. So tax is really important to understand, okay? And it's really simple, okay? So you're paying out money to the GMC right now. You're about to pay out a load of money to the Royal College of GPs for their exams, okay? You can claim up to 40% of that tax back, okay? So it's a load of money. The average GP trainee, okay, going from F1 to ST3 as a GP, who uses our tax rebate guide, will save £2,345 in tax, okay? And you're not doing some kind of dodgy Cayman Islands deal here, yeah? This is just tax that you have paid too much tax, okay? So you got to claim that back. And it's really easy to claim it back. We've got a guide, which we'll drop in the show notes. So just get a handle on your tax. And then if I can have one sort of thing onto that, is just keep an eye on your tax code, okay? Every time you change trust as a junior doctor, your tax code goes totally awry and you can have massive swings in your take-home pay. So you've got to get your tax code right. And you don't have to phone the Inland Revenue anymore, HMRC. We've got a guide on our website, takes you through it step by step. And all of this would be wrapped up by Ed's top tip, is basically get a personal tax account. If you haven't looked at a personal tax account, it's free. It's from HMRC. It allows you to claim tax rebates using our guide, check your tax code. You can see so much stuff on there. It's free. Just get a personal tax account and do it now. That's my first tip. The second tip that I would say for junior doctors is to keep all your paperwork. Now, I know saying paperwork in front of you, Gandhi, the king of tech, might seem a little bit rude, but ESR, the electronic payslip system, is great, but it's not that robust. So keep all your payslips, because eventually one day you might need that. And then the third thing to think about is just to think about, this is going forward in the future, but your pension, okay, is it's still a great deal. It's a massive asset that you have, but you need to keep an eye on it. So at the stage of F1, F2, you do not need to worry about the pension tax that we're going to talk about in a bit. But what you do need to worry about is something called your total reward statement. Your total reward statement, again, it's online, it's free, and NHS churn them out about October. And it gives you a summary of your pension as the NHS understands it. And it's really important to check that for errors, right? Because when I was an F2, I checked my total reward statement, and I don't know if they're being sarcastic or something, because my F2 was horrendous. They had me down as working part-time for F2. And I was like, you absolute jokers. But if I spotted that error when I was, as an F2, if I spotted it now, okay, 10, 12 years later, it'd be much harder to correct, unless, of course, I'd kept my payslips, which links into what I just said. So Yeah, I can't really sort of filter it down to less than 3 tips. That is the absolute minimum. And I think the ebook that we've made, which we'll drop in the links, is free. It's a great place for junior doctors to get a handle on things.
Sure. What I would say is if you wanted a tech tip to try and help with that is use very simple principles about cloud storage to help with that keeping of your paper receipts and all that kind of stuff, particularly PDF apps and stuff. So things like Cam Scanner, that kind of stuff that allow you to take a photograph of your pay slips, of your parking, petrol and all that kind of stuff. And then you can just backload it onto a cloud server. It just makes life easy because then you've always got access and it's searchable. So if you put the dates in it and what it is, you can always go back and search for it, even 20 years down the line, which hopefully you won't be in that situation. But if you were, life's a lot easier. So we talked about, I guess, pre-GP. So now if we're talking about newly qualified, that kind of thing, I know there's particularly for GP trainees, there's a couple of things they need to know about the exams, as you mentioned, with tax codes, but there's particularly idiosyncrasies as well that they need to know about, isn't there?
Yes, so for GP trainees, I think it's kind of similar to the tips for an F1, really. But what I would add into GP trainees is, so definitely get your tax rebates on the exams, okay? You can get £2,345 average saving, okay? So it's up to 40% of the cost, and you're about to find out that the GP exams are some of the most expensive exams out there. So you need to reduce that cost by 40%. And our guide just takes you through it. You do not need an accountant to do this. Absolutely not. You just follow our guide. It's step by step. You do it online. You don't have to phone HMRC because we know that HMRC opens from 9 to 5, like when we were working flat out. So the online system, personal tax account, is brilliant, okay? Keep doing what you're doing with pensions. As a GP trainee as well, your income is rising a bit, okay? And if you've got any debts, then, you need to tackle those debts. And the ebook goes in detail there. I mean, I'm the king of debt because I had 85 grand down when I started med school. And right now, apart from my mortgage, I have no debt, okay? Nothing, no car loans, no phone loans, nothing, okay? So if you're like me, really down after med school, you can do it, but you're going to have to really focus. It's not going to happen automatically. Okay. So yeah, for GP trainees, get your tax back. I guess the one thing I was going to go on to say, kind of related to spend less than you earn for GP trainees, your salary is going up a bit now, and it's probably an all right number. Okay. But if you can still spend like you're an F1 when you're a GP trainee, you're going to be in a really great position because you're going to save up all this cash, okay? And then with that cash, you can invest it or pay down debt or whatever. So just think about spending less than you earn. And there's millions of ways to do that. But I think what I say to people is have a look at your bank account with the same level of scrutiny as you go through your patient's test results, okay? So when we're looking at blood results, we are really paying attention and we're scanning it, okay? We do that every day, all day. When was the last time that you, or not you, Gandhi, because you've probably done it, but the listeners did that to their bank account, okay? Because you've got to understand where you're earning all this money. Where's it all going? Is there anything you can trim off that, okay? And in the ebook, we use the example of a cardiology reg who, she was studying really hard for a PhD. So she was spending about £7 to £8 a day on lunch at the hospital canteen. So it was about £200 a month. And she trimmed that down to 100. And so she trimmed it down by about 40 or £50 a month. Okay. So she trimmed it down by £166. So she reduced her spend by £166. So over a 30-year career, that adds up to about £59,000 of savings. So small savings add up, right? So £59,000 sounds like a great number. But if you were to invest that and got an average 5% return, which historically is definitely possible in a sensible investment strategy, that £59,000 after 30 years becomes £139,000. Okay. So I don't know about you, Gandhi, but I have never had a hospital lunch that was worth £139,000.
Can't remember one, although there was one time I had apple and blackberry crumble, which I must admit I would have been happy to just go at that point. It was special, but I don't think it's £139,000 worth.
But yeah, I mean, actually, after a night shift, I've definitely had a fry up, which was close because I was like on the edge, man, and then the fry up resuscitated me literally. Yeah. But it wasn't worth £139,000. I'm just saying, my point is, small amounts of savings really add up over time, and if you can compound that, so compound interest, something that everyone listening to this needs to understand. If you can compound that at 5%, for 30 years, you turn 59 grand into 139 grand, okay,
Mm-hmm.
just by not eating rubbish in the hospital canteen. So if you go through your whole bank statement with that kind of attitude, you can trim down a lot of stuff, okay? So, yeah, that's kind of it for well, it's not it. There's so much more, but we've got to keep it accessible. So that's my limit for GP trainees.
Sure. So now we're progressing through the career. So we're probably at kind of my stage, 10 years into general practice. I'm, mid-career, I'd probably say, and starting to feel all the effects of that. So family life, other kind of responsibilities, potentially multiple sources of income coming in. So I'm a clinical director. I've got other kind of things coming in. What would you say I really need to focus my financial head onto?
Yes. So hopefully you found Medic's Money when you're on F1 and you've got some rock solid foundations. Okay.
Yep.
So you've saved up a bit of money and you've done all that. You're not overpaying your tax bill. Okay.
Mm-hmm.
And we said that for F1s, all they needed to do for their pension was to get the total reward statement every year and just keep a track on their pensions. Okay.
Mm-hmm.
Now for you, Gandhi, at your stage, unfortunately, you're going to have to do a lot more than just look at your total reward statement because of the pensions taxation, which is incredibly complex beyond the scope of this podcast. But we've got loads of information on it, okay? But in general, for F1s, F2s, ST1s, and 2s, it's not an issue. Once you become a GP partner, you're in that level of income where you may be subject to the pensions taxation. And it is an absolutely absurd tax. It's incredibly punitive if you get it wrong. And there is the possibility of getting a horrendous tax bill. In fact, people may be listening to this podcast who do not know that they have run up a horrendous tax bill and are going to get a nasty brown envelope on their doorstep. But like all of these things financial, if you're proactive and you get the right advice at the right time, it doesn't have to be a problem at all, okay? But the pensions taxation is not to be underestimated at all. So that is one thing that hopefully you've done, Gandhi. I'm sure you have. And if you're listening to this and you haven't even got a total reward statement, then you need to do that. I mean, I find at Medic's Money, we find that GP partners, because you've got a decent accountant already, a decent accountant will give you the heads up about this. And so it's not much of an issue. I kind of feel more sorry for the hospital consultants because a lot of them have been completing their own self-assessment for years and it's easy to do. And they just weren't aware. They were genuinely not aware of this and they've kind of walked into it. And if you walk into it, it can be horrendous. So just get the right advice about your pension. And there's only one place to get that advice, really. And Medic's Money has all of the best pension advisors on it. So that's one thing. You mentioned another thing about, your family and stuff. If you do not have any kind of income protection, okay, just think about it in this way. If you were to get ill or die, how would your family or you pay your bills? Now, if you've got the financial resources to continue living your current lifestyle without your income, then arguably you do not need any insurance whatsoever. But for us mere mortals, just think about that. If you got ill or couldn't work, how would you support your family? Okay. I don't insure anything that I don't like insurance. So I don't insure anything that I don't need to. I don't insure my phone. I don't insure my surfboards, which are probably the most precious thing to me in my life after my family.
Have to have that in. Yeah.
Yeah. I just, so I don't insure things that I don't need to, that I could afford to replace, right? If I break my surfboard, I can replace it. If I break my phone, I can replace it. But if I break, my family will not be able to maintain the current lifestyle that we have. And as a result, I have insurance, okay? And no one likes paying for insurance, but it's absolutely fundamental part of a good, sound financial plan. And then buying it is a minefield because it's very complex, basically. But you've got independent advisors who can sell you any product on the market, so they will find the best one for you. And then you've got restricted advisors who only sell a very limited set of insurers. So they might only cover 5 insurers. And if you happen to fit the criteria for one of those 5 insurers, happy days. But if you don't, you'll end up paying way over the odds. So independent searches the whole market. They are duty bound to give you the best deal for you, not the one that pays them the most commission, the best deal for you. Restricted advisors search a limited section of the market. And as a result, you may not get the best deal. Now, the paradox here is that we're not going to mention names, but probably the largest financial advice firm that specializes in doctors was independent back in the day, but is now restricted. So there's hundreds of thousands of doctors out there who are paying over the odds. So if you already have insurance and you didn't get it via an independent firm, and you might not know because strangely the restricted advisors don't really advertise the fact that they're restricted. So you might not even know that they were restricted. But if you did get it from a restricted advisor, come to Medics Money, get a requote. We've got a case study on our blog where we saved 2 doctors £10,000 because they were just paying over the odds for their insurances. And if you haven't had them reviewed since you were an F1 and now you're a GP partner, get them reviewed because your income and your life has changed so much since then. And again, it's free to get that done. So always get independent advice for insurances will be my number one tip. So we talked about pension. We talked about protection. I think the final thing I would say is just have a little think about your life plan. Now, best laid plans always go awry, okay? But do you want to work to? So my retirement age right now in the NHS pension, thanks to the 2015 scheme, is 68. Yeah, and it's crucially it's linked to state retirement age. If you've got 95 scheme, then you're in a dream there because the pension age there is normal pension age is 60. Okay. But our 2015 section that you're in, I'm in, is linked to state retirement age. So at the moment, we're going to be doing a GP until we're 68, Gandhi, which that's great, right?
Or later, because as you said, it's linked to state pension age, which obviously by the time we get to that point may be considerably later.
I'm so glad you said that because the linking to state retirement age is a fundamental difference from the previous 95 section where the retirement age was fixed, okay? Linking it to state retirement age, as you've just alluded to, means that we could be in our 70s still seeing patients doing GP. So if you don't want to do that, okay, and I'm not suggesting that you don't, but I don't, okay? I'm just saying it right now. Then you're going to need some kind of backup plan, okay? And this is where we get into investing, okay? So lots of doctors think that investing is complicated and it is a potential minefield. But if you do investing right in a nice, safe, sensible way, it is a very good way to augment and boost your income. Okay. And it could also provide you with the income that you need to match your desired retirement age, which for me, I'm thinking 55 maybe. And then to cover that gap until you can draw your NHS pension at state retirement age. Now, obviously, you can draw your NHS pension earlier if you wish, but there's what we call actuarial reductions, which is in English means they just reduce the amount you get, and they can be quite punitive. So if you can use the basics that we've taught you to minimize your spending, save up, get extra cash flow, and invest that money sensibly, then you could potentially be in a great position at 55, because otherwise you could be staring down another 15 years of work at the NHS coalface as a GP, which obviously would be great, right?
Yeah, absolutely.
So
I guess a couple of tips I'd chuck in there as well. So you mentioned about contacting Total Rewards and stuff. I definitely recommend people do that early. That process alone can take several months because of all the debacle that we've had with PSCE and that kind of stuff. And having gone through that myself, it's taken about 3.5 months, I think it took me before I even got to my updated Total Rewards statement because of all the background issues that have happened. So definitely, it's not something that if you've not done before and you suddenly go to log on, you're going to get access to. You're going to have to do this well in advance because it just takes so long. Really does. And I guess the second one I mentioned about pensions, as you mentioned, pensions, and particularly the biggest question I often hear from people is, should I stay in the NHS pension? Now, be clear, that's not a question we can answer for you here because it needs specific financial advice. And a couple of things do massively play into that. It is still considered one of, if not the best pension scheme around. And particularly some of the key things for that is the death and service benefit that has a real, key benefit for those working in the NHS. But there are some weird rules about that. I think that's probably going to be potentially another episode. We're going to have to go into that in more detail. But if people do want some updates on that, I have got an episode with Rachel, who I think now works with you guys at Medics Money.
Rachel Hall from Sounding Medical. I actually just recorded a podcast with her, 2 podcasts on the NHS pension. So yeah, she is on Medics Money. She's an example of the caliber. She is a caliber of advisor that is a good advisor. You know, she specializes in the pension. She's one of the very best. And she's one of 38 on Medics Money.
I definitely recommend speaking. So we've done an episode with her, with Nick Grundy, who's the chair of GP Survival, and Christian Bannon, who's worked at the GPC at the time in terms of looking at the pension stuff. And we kind of went over the whole ins and outs of the NHS pension back then. It's about a year or so ago, but a lot of it still applies. So definitely feel free to check that out. And I'll put the links down below.
Yep.
But we talked about middle career. I guess if we just finally finish off talking about towards the end of the career, people, so they're getting towards that retirement age, thinking actually now I want to take that step. It is a bit of a minefield right now because of some of the weird regulations. Can you just give us a couple of tips for those people listening right now?
Before I do that, I just want to say something really important. You mentioned Nick Grundy and the work that he's been doing with pensions. This guy is definitely not getting enough credit for the work that he's done. So you were quite polite about PCSE there, and probably that's because your legal team is as big as my legal team, right? So PCSE. Yeah. They're not the best. Okay, so this is where it goes back to my point about keeping your own records. Okay, because you need to be on top of PCSE because the pension records are most likely inaccurate. So if you haven't got the data on your own, Form A's, Form B's when you're a locum or whatever, you need that data. Okay, because PCSE aren't the best. I think that's a polite way to say it. And let's move on. I wanted to just say about Nick Grundy. Nick Grundy has been doing heroic work with this behind the scenes. Mostly, we've worked with him a little bit, but tiny amounts. Okay, this guy he's a GP partner like us as well, and he's been doing great work. Okay, the PCSE thing is a massive issue right across, not just pensions, because obviously, as you know, we deal with PCSE for all kinds of things. So, massive shout out to Nick Grundy and the GP Survival guys because they've been doing great work on this, and there's a lot more to do, but they're on it.
Awesome.
Yeah. So back to your question, which is you're approaching retirement, right? Yeah. So how far off retirement are we?
So say we're talking about 5 years pending retirement. So you kind of like up to 5 years to go. Could it even be maybe next year, shall we say?
Okay. Oh, wow. The dreamland. Hey. So I'm going to assume that you've got everything in order, like your pensions in order and everything like that. Okay. And I'm just going to sort of say a few things that you need to think about. One, 5 years out is a bit late, but you need to think about what kind of retirement you want and the cash flow that you're going to need for that. Because if your pension's 20 grand, right, and you've got aspirations of a 40 grand lifestyle, you've got big problems. Okay, you probably aren't retiring in 5 years. Sorry. So you need to think about that. Okay, so if you're never going to get financial advice and you don't think you need it, okay, and you're going to go through your whole career doing it yourself, okay, good luck. Medics Money can kind of help you there, but not all the way. But at the end of your career, getting financial advice on your retirement planning is absolutely essential, not just for the reasons that I mentioned, but for other reasons as well. So without being morbid, you're going to need to think about a succession plan, okay, aka inheritance tax planning, okay? Because if you do that right, inheritance tax planning, you're not going to have any issues. But if you do it wrong, it's going to be another really expensive tax bill for you, okay? And we're not talking about tax avoidance here. We're talking about using the tax legislation to make sensible, legitimate decisions so that you and your family can benefit from all those many years of hard work. So I'm also going to say about having a will, okay? You need to have a will. If you've got to 5 years and the end of your career and you still don't have a will, that's an absolutely fundamental part of financial planning, having a will, okay? So get a will, think about inheritance tax, and make sure you've crunched your pension numbers properly so that you can match your aspiration for your income in retirement to what your actual income is going to be. And after all, if you're that close to retirement, enjoy it. You've worked so hard in the NHS. Me and Gandhi are still going to be here steering the ship until we're age 75 or whenever. But just, that's what I would say for the people that are approaching retirement, assuming that they've done everything that I've said already.
Yeah, so obviously that comes with a big caveat of making sure that your house is in order and getting everything else sorted well before you get to that stage. If not, you've got a mountain of work, unfortunately, ahead of you.
Yeah. The one thing I wanted to say as well, just catching up on something you said earlier, you're right. I cannot give you specific financial advice about leaving the pension scheme or not. But what I will say is we have some great articles on this on the Medics Money website. The pension is still a great deal for the vast majority of us, okay? I don't anticipate a situation that I would ever leave the pension scheme. People say, oh, I could buy property, I could get a private pension and stuff. If you're thinking about doing that, okay, the one thing I say to you is please get advice, okay? Because every time I speak to a financial advisor about this, I say to them, look, you can swap your private pension that you've got as a financial advisor, or you can have my NHS pension scheme. Do you want to swap? And I haven't found one yet that doesn't want to swap, okay? So the pension is still a great deal. It does have its issues, which you need to be on top of. We've covered them very briefly here today. But if you are thinking about opting out or leaving the pension scheme, please just get advice, because it's an incredibly valuable asset. The vast majority of people will still be better off in it, at least for some time, even if you have to come in and out. But just don't leave without getting proper financial advice. And I am not a financial advisor, neither are you, but I can show you the best financial advisors in the country, like Rachel Hall that you mentioned earlier.
Yep. And I definitely echo that by saying that, don't listen to us about financial advice when it comes to that particular area, because absolutely needs that specialist viewpoint. Also, don't listen to the army of people in social media groups and that kind of stuff telling you that you should or should leave the NHS pension. Get the specific advice that's individual to you from somebody that knows what they're talking about, because that will be so much more valuable, and it will stop you making the wrong decision or potentially the right decision for you in a way that is just effective and best for you and your family.
I'm glad you mentioned social media. I don't want to offend you again by sort of suggesting this, but some of the best financial advice I've ever seen has been in the Facebook forums and groups, and some of the worst has been in there. The problem with doctors is, if a patient comes to you and says, "Doctor, I've been on the Facebook forum for X, and I've realized that I've got some super rare thing because someone on Facebook told me." Okay, we wouldn't laugh in their face, but we would be slightly skeptical. Okay, yet doctors go on Facebook and ask fellow doctors about finances, and that neither of them are qualified. Neither am I. Neither are you. And so, because we suffer from authority bias, okay, that is that we are doctors, so we trust each other. Yeah, I trust your medical opinion, but I don't trust your financial opinion because you're not a financial advisor. Neither am I. So I think, don't make any, it's a good way to get informed, but just don't make any big calls on the basis of a tweet or any advice that you get in a Facebook group, because although it's often very well meaning, when I go through it with Ed, it's just scary how inaccurate some of it is. And, so sorry
the key
for
thing
offending social media in front of you.
No, not at all. But the key thing is that your individual circumstances will massively change even simple things. And no two people are ever going to be the same in terms of the responsibilities they have, in terms of the finances they have. No two people will ever be in the same situation. And it can take just that one slight little thing to make the advice be completely different because of that situation that you get. And that's even the things like tax codes you mentioned. Obviously, tax codes can change based on just one separate piece of income source that you maybe even forgotten about, but then realize when you went to review it with somebody that knows what they're doing.
Yeah, absolutely. I think that's the key thing, that your individual financial circumstances are almost unique to you. So you need, if you're not going to get advice, definitely educate yourself using a resource on Medix Money. And I think at the start of your career, that's all you need.
Awesome. So that we've covered pre-GP, we've covered newly starting and GP trainees, we've covered mid-career general practice, we've covered coming up to your retirement and stuff. I think that's some awesome tips and stuff. And if you have found this really useful, definitely make sure you click a like and leave us a comment to see what you thought about this particular episode. I guess, Tommy, if people needed to contact Medix Money, where's the best place for them to go to find out more information?
Yeah, so our website, medixmoney.co.uk, that's a great place to start. But if you're listening to this and you're in a bit of a panic because you've never seen a total reward statement, you haven't got a pay slip, and you may never have an idea about your pension, a really good way to get up to speed quite quickly is to download our ebook. It's totally free. I looked the other day, I think we're on like 15,000 downloads or something insane now. So we'll drop the link below, but it's medixmoney.co.uk/ebook. It is a great way to just go through nice and gently. We cover everything: how to pay the right amount of tax, how to save, how to budget, how to pay down debt, how to get started with investing, how to protect your family's income. So we cover all the basic points in there. So if you're in a panic right now, don't panic. Just head to medixmoney.co.uk/ebook. And then the other channels that we have, we've just started our podcast because the best podcast host in the business inspired us to do it and helped us to do it. Thanks, Gandhi. So we're 10 episodes in. You should be. I mean, it's great what you do. I love what you do. We're 10 episodes in, and by the time this comes out, we will have probably done our brand new feature, which is the Medix Money Financial Clinic, right? Which is basically, it's just like a clinic. So we get one of the doctors with a financial problem, and we get one of our financial doctors, aka financial advisor or accountant, and we run through the scenario just like in clinic, okay? And it's really realistic, okay? We didn't feed them any water, so they got a really hoarse voice, and they were running super late. And then at the just one more thing that patients do to us all the time, I dropped an absolute bombshell on the advisor. He was just tearing his hair out. But that's how clinic is. So the Medix Money Clinic is a really cool feature on our podcast. So check out the podcast.
Awesome. Definitely keen to hear that one. That sounds like it's going to be, a nice little listen and stuff. So definitely check out Medics Money. I know they've got loads of content and stuff that you guys are definitely going to check out. And like Tommy said, just sort your finances out. It will save you so much stress and pain further down the road that if you just get it done and sorted, it just makes life so much easier. Thank you, everybody, for listening. We hope you had a really amazing time listening to this episode. As always, click the like button. Make sure you subscribe to the content. Love it if you do so. And definitely leave a comment. Love to know what you think about this content and stuff. And as always, EGP Learning is here to help save you and your patients time by taking hands in your primary care and learning. And we'll catch you next episode.